incredibly excited and incredibly bullish on Bitcoin specifically, crypto more broadly, but Bitcoin in particular. I think Bitcoin is clearly the alpha in the crypto sphere, both in terms of coming first and also being clearly the most dominant. I think the analogy of digital gold is powerful. And the insight that led to its creation is still extraordinary. Listen, I'm a Bitcoin investor personally. I have a standing buy order. Every Monday morning I have a buy of Bitcoin that comes in, and I own a little more than 2 Bitcoins. So and every Monday I own a little bit more.
There you have it from Senator Ted Cruz, and he's telling you how he stacks sats, how he's buying Bitcoin every 2 weeks when he gets paid. Are you stacking Satoshis? Don't miss out. And with that, what's happening, Crypto Crew? Sean's coming back at you, another cryptocurrency video, and getting straight into it. What do we see on the Bitcoin price chart? This is an important chart we want to show you. At the current time of this recording, Bitcoin's coming in at 29.1K. What do we see, and why is this important? We're looking at the EMA ribbons, and we're looking at Bitcoin on the 2-week chart. So we see every single time Bitcoin has a drawdown. The first time back in 2013 when we had the bear market in 2014 and 15, 87% correction. Then we ran up to that $20,000 peak, 84% correction in the next downturn in 2019. And then we came up to that $65,000 peak, had that weird retracement where we actually made a higher high there. From that peak, we still went down 76%. So as you see, the retracements are getting shorter. But how high are these peaks actually going after the halving as far as percent gain? So we have a 62,000% move back in 2012, and then when we bottomed out in 2015, from the bottom to the $20,000 peak, we got a 12,000% move, and then from that $3,100 bottom to that $65,000 peak, we still had about a 1,900% move to the upside. As you see, the percent gains continue to diminish as well. So from the 2013-14 peak to the 2017 peak, we see a 5x decrease. And then from the 2017 peak to the 2021 peak, we see a 6x decrease. So let's just say we see another 5x decrease from 1900, 1901, divided by 5. So we could have a 380% move to the upside. Now, is that going to be realistic? Is that going to be probable? Let's see. Let's pull it from this bottom here. We're looking at 15.2K, 380%. That would only take us back up to roughly 75,000. That'll be putting a higher high, but you know, Bitcoin bros are going to prescribe that we're going to definitely overshoot that. We're probably going to hit that $100,000 mark as a minimum. If you note this green trend line here, we hit this peak once here and then twice. If we come up and hit that peak again after the halving, we could be seeing $180,000 to $220,000 Bitcoin, depending on when the peak is hit. Another update from BTC 2037. Imagine thinking this will not happen. The reserve currency status does not last forever. What is next? So as you see here, we went from Portugal to Spain, Netherlands, France, Great Britain to the US. What's next? Is it going to be Bitcoin? It seems like this could be what's in store over the next 100 years. Now, all of us won't be around. Great grandkids will, reap the benefits of your investment decisions today. So it's a long-term play, but over the next 10, 20 years, you can definitely change your life. But the long-term play as reserve currency, what's that going to look like? An update from Titans of Crypto. Next target for Bitcoin is around 39,000. If we continue to follow this pattern. So he's looking at this pattern here. It's a continuous pattern where you have some chop and it's in a widening wedge, and then we sort of have this peak here and then the price objective here. Look at this chop and the widening wedge, this peak here, the objective price around 39,000. This is sort of a guesstimate. This could be 39,000. We could hit 40, 45K. But all in all, Bitcoin's going to go higher than what it is today. In some crypto news, we see that Coinbase responds to the SEC's Wells notice. The SEC gave them a Wells notice last month, and as we continue this process, we're committed to being transparent as possible with our partners and stakeholders. Let's hear a brief snippet from what they said to the SEC.
Coinbase will defend itself vigorously in litigation if it comes to that. But it does not have to come to that. We will show up at your offices any day, any time to discuss a workable path forward for our industry. But we won't find that path without true dialogue.
So we hear that from the chief legal officer from Coinbase. The Coinbase CEO is also saying the SEC's crypto warning is not good for America. And this escalation sparring between Coinbase and SEC, we'll see what comes of all this. Brian Armstrong is saying that there could be some negative news for the crypto space in America. But this could be FUD. With all this FUD, you see MasterCard is still seeking to expand crypto card tie-ups. And what they're looking to do, MasterCard will expand its cryptocurrency payment card program by seeking more partnerships with crypto firms. The company's head of crypto and blockchain said, even as this sector comes under closer scrutiny from regulators and banks grow wary. They've already partnered with crypto exchanges including Binance, Nexo, Gemini to offer crypto-linked payment cards in some countries. The Binance cards allow users to make payments in traditional currencies funded by their cryptocurrency holdings on the exchange. Even though you're hearing FUD from Brian Armstrong in the regulatory battle that's going on between Coinbase and the SEC, don't miss out on your opportunity. Without further ado, we have an update from Anthony Pompliano, and he is interviewing Darius Dale. You can check out more from Darius at 42 Macro Weather. And what Darius is talking about is the Bitcoin having volatility and what he sees coming up over the next 12 to 18 months. Let's hear from Darius.
One thing that sort of has me, with respect to Bitcoin specifically, that has me sort of concerned about anticipating that's going to spill over into Bitcoin in the context of this kind of store value discussion is the fact that we have a halving next spring, right? I want to say in April or May of 2024. And obviously halvings tend to be this, very, very bullish event for Bitcoin. And at least that's what I thought initially in my speculation. So I'm sitting here thinking, is Bitcoin even going to go down in this phase 2 credit cycle downturn? Let's say the SPY gets to, down 20% from here. It'd be like 3,200 or something. Does Bitcoin go to 17.5 again? Or does Bitcoin stay where it is or even appreciate? Because that'll be very close to that, springtime halving. So I did a little work, this morning, kind of trying to identify, okay, is there a history of volatility in Bitcoin heading into the halvings, or is the kind of the halving the catalyst for the kind of record appreciation on the other side of that? And the results of the study that I did suggest that there tends to be a lot of volatility in the year into Bitcoin. So into the November 2012 Bitcoin halving, we saw a minus 39% max drawdown in February of 2012. And so I'm looking at the year prior to the halvings. And we saw a minus 27% drawdown in August of 2012. In the July 16 halving, we saw a minus 30% drawdown in August 15. We saw a minus 25% drawdown in November 15. We saw a minus 20% drawdown in February 16, and we saw another minus 20% drawdown in June of 16. And then lastly, into the May of 2020 halving, we saw a minus 48% drawdown into December 19, and then another minus 53% drawdown kind of during COVID in March of 2020. So that's a lot of crashes, man, in the year leading up to the halving. And so I just want to put that out there and say, hey, look, I know this is going to be a very positive event. I think if we're having this conversation 18 months from now or 20 months from now at the end of 2024, Bitcoin's probably at 200,000, if not higher. And I definitely would fully buy into that view. It's just the path to getting there, if you're trying to build a big position to take advantage of that, is likely to be very volatile. At least that's what history suggests.